everybody, good morning, good evening, good afternoon, students and traders all around the world. This is Mike, the FX boss, broadcasting you live. Hopefully, sound check. Today it's working. Hopefully, right? Alright. Yes, sorry for yesterday. I mean, you would not believe me, but you know, if you ask me, oh, what was the trick? What did you different? Nothing. I did absolutely nothing. I just this morning I turned on the computer and the microphone started to work. So it's OBS, right? You know, it's not a problem. Alright, everybody, welcome to the Professional Forex Trading Course 101. A little bit different layout, alright? So we are getting about after, I'm not sure if the Captain Yanis is in here, but I'm not, after what, about 5 years being together? 5 years being together? 6 years? Everybody, we're going more into the step by step, right? We're going to more and more into trading. Okay? So if you're a beginner trader, you can open an account with Darwin X0. And if you want to receive the free manual, which is this one, okay, give me a second. That's the free manual on the road to becoming a professional trader, professional forex trader course 101, the market phase. Alright, open the account at Darwin X0. You have a discount code to record if they didn't change it. Alright, and then send me an email so I can send you the free Forex Course 101 manual. Alright, now next one, if you are looking for seed capital, you know, if you want more money to trade, and if you're an advanced trader, you can open an account with trading.com. And lastly, if you want to start trading immediately, a $500,000 or $1 million account, you can buy the account here, suitable for advanced traders only. Alright, now don't mistake those three. Alright, don't mistake those three. Darwin X, it's an asset manager. Trading.com, it's an investment company. Search Trader, it's a prop firm. Alright, so you have three different business models in here. And that being said, everybody, never forget, you're going to graduate from this course when you have your chart set up and ready for trading. You have a strategy in place, you understand why you win, why you lose, and you have a complete understanding. We're working on this one. Number 3, you have a complete understanding on how this market works, so you can analyze the market and make an educated prediction. This is new too. If you want to join live New York trading sessions, you must have an account with any of mine partners, or Darwin X0, or trading.com, or Search Trader. Okay, if you don't have a discount code, send me an email. Alright, you can have this is a discount code already. Now Search have also 20% off. Alright, this one not. This is an investment company, so different models. And lastly, everybody, risk disclaimer, this stream is not trading or investment advice. We are here to learn. So jumping into the markets, rules for trading the Contrarian Fibonacci. Now let's open Euro dollar. It's retracing, if I'm not mistaken. Euro dollar is retracing. Give me a second. And Euro dollar daily chart, that's the system. Let's check about Euro dollar, and we are here. Give me a second, everybody. Alright, so this is the original Fibonacci on Euro dollar, is still up, right? And then the Contrarian is down, and this one is the confirmation. So everybody, it's up and it's going down. Would this be a great example how to trade a retracement? What if we go on, let's find another one, everybody, give me a second. Maybe 4-hour chart, 4-hour chart, and the market was down and up and down. Not sure about that one. Let's check AUD USD, alright? AUD USD. Yeah, we need to find the market in a retracement. Yes, thank you very much for remembering. Yeah, we're going to do this. Just let me find the currency pair. Alright, AUD USD. Let me see this one. Give it a second. Alright. Looks like we find one. AUD USD daily chart. Fibonacci is down. Perfect example. Alright. So out this one, out. We're going to clean a little bit. Out. There you go. Okay, so happy Easter. Yes, thank you very much. Happy Easter. We had Easter festivities, right? Now, one more time. This is for the Contrarian Fibonacci. Alright, so the original Fibonacci, everybody, we are using the original Fibonacci to determine trend direction. So the original Fibonacci is stronger compared to the contrarian. Number two, then we compare trend direction from the larger time frame to the lower time frame. And number three, the last thing we need to do is to identify in what zone are the Fibonacci's on the larger time frame and the smaller time frame. So this is as far as it goes for the original Fibonacci, and confirmation comes tomorrow. And there you go. So this is the Contrarian Fibonacci. We use the Contrarian Fibonacci to trade retracements. Alright? And until the D extension, so trading rules, until the sub D extension, so the contrarian is the black. Alright? Until the sub D extension of the contrarian Fibonacci is still inside the capital AB boundary of the original Fibonacci, capital AB, this is the original one, you are entering trades of the original Fibonacci with a probability 50-50. Alright? If you can find a contrarian Fibonacci with a projected sub D extension above or below, like in here, then you are entering the original Fibonacci with a probability of 80 to 85%. What does this mean when it comes to trading the Contrarian Fibonacci? Alright? So, we have this is AUD USD daily chart, and we're going to put some text in here. This is our A, up in here. This is our B, down in here. And this is our C, up in here, ABC. Alright? And do we agree, everybody, that the market broke the downtrend line? Yes, this works the same on all time frames. Alright, yes, exactly. Alright? So let's say that this is the market, and it could be even before, but this is the most recent scenario, right? Okay? So let's say that I want to trade the Contrarian Fibonacci. What do I need to have? Well, I need to, for starters, I need to have a low and a high, right? To measure. So text, as always, we're going to change colors, make it smaller. So this is going to be our sub A, and clone. Now we have edit label, we have our sub B, maybe bold, right? Alright, this one too, edit label, make it bold, alright. And clone, give it a second, whoops, clone. There you go, edit label. This is going to be our sub C. And one more time, right click and clone. This is going to be our, give me a second, edit label. This is going to be our sub D, right? Okay, everybody, just a second. All right. So this is our sub A, is down here. Our sub B, it's up in here. Fibonacci retracement tool. We spread the Fibonacci retracement tool, and we are going to right click and change colors. Alright, and we are going to sub A, sub B, sub C, sub D. Alright. Now, rules for trading the Contrarian Fibonacci. Alright, so rule number 1. Give me a second. 24. Rules for trading the Contrarian Fibonacci. Alright. Rule number 1. Riskless compared to the original Fibonacci. Example, if you are risking 1%, example on the original Fibonacci, then risk 0.5% on the Contrarian Fibonacci. Alright? That's a rule number 1. Take a screenshot, snapshot, photo with the cell phone, type in the chat. Done? Alright? Yeah, just an example. If you're risking 1% on the original Fibonacci, then risk less. Why? Because it's a... Thank you very much for asking. Not on YouTube, but on the other streaming platform. Because, so never forget, Contrarian Fibonacci is a retracement trade. Never forget, Contrarian Fibonacci is a retracement trade. If this is your first time with us, please go back to Dukascopy Academy and start to watch lesson number 1, what is market structure. Alright? We've learned about market structure, called also the market wave. Alright? Forex course 101, it's all about how this market works. You are going to spend 1 year just to understand the logic and the rules of the market. And one of the logic and one rule of the market is that extensions are bigger or longer than retracements. Hello Sam, how are you? On which base is the risk calculated? Answer, it's your choice. Your choice, Sam. Alright? Everybody, thank you Sam, it's a great question. How much you are going to risk? Desk, there you go. How much you're going to risk, it's up to you, everybody. Make sense? But in the Forex course 202, then we are learning different risk models. Alright? But professional money manager risk 0.5% per trade. Pen and paper right now. Pen and paper. Professional money managers risk 0.5% per trade, and if the market go into their direction, then they build the position. Alright? What does this mean? They re-enter again and again and again. But in the Forex course 202 we also learn about what it's called the A+ trade. When we risk more, we risk 2% per trade, we risk sometimes 5% per trade, but those trades don't come easily, you know, they happen time to time. Make sense, everybody? But lastly, thank you Sam, it's a great question. Lastly, it's our choice as traders. Alright? But some people are new to the show. Go back to Lucas Copy Academy and start to watch lesson number 1, what it's market structure, and learn about the market wave and extension, retracement, extension. And because retracements are smaller, just because of this, risk less. Alright? It's easy to be stopped out. On a retracement trade. Alright, so this is one rule, right? Now, if we zoom out, this is our Contrarian Fibonacci. Everybody going to move the text. Hopefully you took the photo picture already. So we are here, I'm going to zoom in, and let's say that I want to do a retracement trade. I have my SB. Now I'm waiting and I'm waiting and I'm waiting and I'm waiting and I'm waiting. Bam. What you are going to learn new right now is that you can draw a Contrarian Fibonacci on a Contrarian Fibonacci. Does this make sense to you? If you are following the classes correctly for the last 2 months, you've seen this picture, alright? And it goes, all the rules apply to all Fibonacci's on all time frames. Every Fibonacci can have the Contrarian Fibonacci and the Fibonacci of the confirmation. Yes, also the Contrarian Fibonacci can have a Contrarian Fibonacci. If not, how are you going to find the capital C of the Contrarian Fibonacci? This is the logic behind. Alright? So, here is the question. Is our sub C confirmed? You are going to still Listen up, listen up, listen up. If you want to become a day trader, intraday trader, listen up. Short-term trader, listen up. You are going to risk less because it's a retracement rate, alright? Now, but if is your sub-C confirmed, what does this mean? So the original Fibonacci is still stronger, but do we have a great chance, great probability for the market to go up and fulfill our sub-D extension? Boss, I don't get it. If you, so it's alright, it's alright. You can ask questions, everybody, it's alright. Don't be shy, we are here to learn, alright? If your normal risk on the contra Fibo is 0.5 example, then risk 0.25 if you don't have a confirmed sub-C. Wow, right? This is, I mean, this is some knowledge to learn. Does the capital C depend on the first contrarian? Does the capital C depends on the first contrarian Fibonacci? Sometimes yes, sometimes no. If we're talking about the capital C of the original one, if you're talking about this capital C of the original Fibonacci, the answer is sometimes yes, sometimes no. But if we are talking about the sub-C, alright? So today we are, everybody, this lesson today, it's kind of how to, if you want to use the Fibonacci to intraday trade or to day trade, alright? As always, we are on the daily chart because it's not moving, otherwise you can do this on the 15-minute chart, 30-minute chart. Are we clear, everybody? Take a screenshot of this. Give me a second. And let me see if I can put it better. Up and up and up. And sub-C one more. Alright, everybody. Rules for trading the contrarian Fibonacci. Rule number 1, risk less compared to the original Fibonacci. Example, if you're risking 1%, example, I'm not suggesting anything. If you are risking 1% on the original Fibonacci, then risk 0.5% on the contrarian Fibonacci. Never forget, the contrarian Fibonacci is a retracement rate. That's why you should risk less, alright? Now, if your normal risk of the contrarian Fibonacci is 0.5% from the example, then risk half of half. Risk 0.25 if you don't have a confirmed sub-C. Does this make sense? It's the same logic, it's the same rules. So everybody, is this sub-C confirmed? Yes or no? everybody? Is our sub C confirmed? Yes or no? There is no right or wrong. What do you think? How do you know? Well, this is the, yeah, I'm going to change colors, alright, give me a second, changing colors, edit level, not this one. So, let's change colors, alright. So, we are trading sub A, sub B, sub C, right? And we put a contrarian Fibonacci on the contrarian Fibonacci. The question is this sub C confirmed? Where is the, I need to write sub A, sub B, sub C, sub D, but as you can see everybody that this contrarian Fibonacci isn't the sub D below the sub A. Can you see it? Boss, this is confusing. Well, you need to practice. I know it would be easier everybody to do just this, right? It would be easier for me to just have a sub A, sub B and sub C and just trade the sub C, right? But I can put a contrarian Fibonacci on a contrarian Fibonacci to understand the probability of this retracement trade. Does this make sense to you? Yes, this is an advanced class. This is an advanced class, everybody. If this is your, I know, if this is your first time with us, please go to Dukascopy Academy, everybody. Give it a second. Let's see if the internet is going to work. Go to Dukascopy Academy, click on playlist, and here you have full systematic Forex course. And start to watch lesson number 1, lesson number 2, lesson number 3, and so on and so on and so on. Alright? You are new, yeah, I'm sorry, this is an advanced class. Talking about knowledge. So this is the manual of the Forex course 101, the market phase, talking about the knowledge. Alright, you need to watch one stream per day, watch one video per day. You know, this is we covered already all of those lessons: technical market structure, highs and lows, market behaviors, trend lines, consolidations, multiple time frame trading, support, resistance, pivot point, bullish and bearish candlestick formations. So finally, now we are learning about the Fibonacci's, and also about the Fibonacci's we are over 1, 2, 3, 4, 5, 6, 7, 8. Yesterday didn't work the OBS, but okay, so rules for trading the contrarian Fibonacci. Alright? And Sam answered correctly. It depends on the second contrarian Fibonacci. Watch one video per day. Dukascopy is uploading the lessons and come back here with questions. Yes, it's confirmed. Alright, so how are we going to enter? What does the picture say? Things to remember: the higher time frame controls the smaller time frame. The Fibonacci is stronger than the trend line. You want to buy the C and take profit at the D. Alright? So we are in extension when the market found the C and the trend has shifted. The market broke the counter trend line break, or the market has crowned. What does this mean? Or how does this look like on the chart? Alright? So me and Sam, we know that it's a confirmed C. Now I'm waiting for the correct moment to enter. So bam! Would this be a counter trend line break, everybody? Would this be a counter trend line break? Or it's similar story. You could buy also this is a bullish candlestick formation, isn't it? Everybody, would this be a buy on the Contrarian Fibonacci? Remember, we're on the, okay. Fair enough, alright. We're going to go on the 15-minute chart, alright? We're on the daily just because it's not moving quickly, so I can have time to explain to you and... Alright? Okay, so this would be the entry. Now, listen up. How is our risk-reward ratio if we put the stop loss below the sub-A? And even worse, this is the sub-C, right? And the market hit the white, so we are going to profit take at the white. Right? So we're going to profit take at the white level, sub D. This is our take profit level. I don't want to hear yes, but those are the rules. You're trading the Fibonacci sequence. If you're trading the Fibonacci sequence, you are going to get here, right? Okay. Now, if I put my stop loss below the sub-A, does this trade make sense risk-reward ratio wise? Does this trade make sense risk-reward ratio wise? There is no right or wrong. No, it doesn't, right? So what can we do? We can put the stop loss below the sub-C, right? It's an option. Boss, but you said that the safer it's to go on below the sub-A. Yes, this is true. This still stands. Alright? So now I have a choice. If I want to take this trade, I need to put below the sub-C. And still, still it's not the perfect or the best. So now we have a choice to make, to take this trade or wait for the next one. Okay? But anyways, I'm not going to put it below the sub-A. This wouldn't make any sense. Listen to me. If you do this once, it's not a big deal, but if you do this over and over and over again, if you are risking more than you are making, your account is going to draw down. Does this make sense? So you can do something like this once, but after 100 and 100, one trade means nothing. After hundreds and hundreds of trades, I mean, just look graphically. One loser is going to eat two winners. So me personally, in this example, I'm going to put the below the sub-C. It's not the perfect trade, but it's also like almost 1 for 1. Alright? Or if you don't like it, you can say, alright, I'm not going to do this, I'm going to look for another opportunity. Does this make sense? Alright, so I'm in the trade and bam, hit the extension, sub D extension. Remember, the sub D must be a high. This is our new trade, our new Fibonacci. Sub A goes to sub C and sub B goes to sub D, and I have a new Fibonacci, Contrarian Fibonacci sequence. Alright, and let's see if we can do one more. So we are monitoring the market, monitoring the market, monitoring the market, monitoring the market. Bam, we have now this is our sub C. And again, if I want, I can draw a Contrarian Fibonacci on a Contrarian Fibonacci to figure out risk. Should I risk 0.5% on this retracement rate, or should I risk 0.25 on this retracement rate? Does this make sense? Alright, so again our sub C is confirmed, and entry is going to be counter trend line break, or maybe the bullish candlestick formation, whatever. Counter trend line break, we don't have it, no entry so far, no entry so far, no entry so far. Now I need to readjust. This is now the downtrend line. I can draw an aggressive one. Alright, so this is now the sub C, and our entry, well, if this is the candle, right? And because this is the daily chart, I need to wait for the daily candle to close, but anyways, you know, this would be now the, let's say that this candle is closed. Now, yes, now it makes sense. So this would be the sub A stop loss, and red goes to red, right? Red goes to red. So I'm risking 1 Bitcoin, 1 Euro, 1 Ethereum, 1 Ferrari to get 1.7 Bitcoin, 1.7 dollars, 1.7 euros, 1.7 Ferrari. How is the probability is FT5? Can you... Sam, can you be more specific? I don't understand your question. Let me say hi. How, if the probability is 85, can you risk? Everybody, don't mix the original Fibonacci with the contrarian. Alright? Don't mix the two in terms of risk. Remember the lesson before Easter celebrations, everybody? Give it a second, Forex needs some time. Remember this lesson, everybody? Fibonacci in multiple time frame trading. Don't confuse the risk of the contrarian with the risk of the original Fibonacci. Alright? You must understand alignments, and you must understand that the monthly is the strongest, the next one is the weekly, the next one is the daily, and the least important is the 1 hour, 2 hour, 4 hour chart. When it comes to alignments, when it comes to direction, okay? So you must understand, if you are trading the contrarian, let's say this is an example, right? The original Fibonacci on the daily is down. You have a confirmed C from the down original Fibonacci. Your sub D extension is above the A, so you want to short the contrarian Fibonacci on the original, on the 1 hour, 2 hour, 4 hour chart. Question: should you risk less or should you risk more? Because here it's a confirmed C. What's the answer? Let's see if we are learning, everybody. Should you risk less or should you risk more? There is no right or wrong. Captain Suresh, how are you? And thanks for the messages every day on WhatsApp. Appreciate. Exactly, risk less. Risk less, everybody. Oh, but it's a confirmed C. It doesn't matter. The retracement trade are riskier compared to the original Fibonacci and the extension trades. What does the manual say? Trading Fibonacci numbers, rules for trading the contrarian Fibonacci. Forex course 101, rule for trading the contrarian. When you trade the original Fibonacci with the contrarian Fibonacci, you can trade the retracement while the extension, the projected extension of the contrarian Fibonacci is still inside the AB boundary of the original Fibonacci. Alright? Pleasure of mine, thank you. Trading the first contrarian Fibonacci, day traders, if you are going to use Fibonacci's on the 15-minute chart, on 30-minute chart, trading the first Fibonacci is okay, but not the second one, as the extension of the contrarian Fibonacci, red circle, is away, it's below the capital A. The red circle falls out of the AB boundaries of the original one. Everybody, I don't know how to tell you, if you trade this contrarian, this is a stupid way to lose money. Does this make sense? If you know that the original Fibonacci is stronger and you have a confirmed C, and you short the market in here, and I'm telling you, you can call me out, you are going to lose on this one, 7 times out of 10. This is really talking, no, I'm not arrogant, I'm talking about knowledge. This is really a stupid way of losing money. Does this make sense? Douglas is here, smiling. Everybody, Douglas is one of our best traders so far. Tomorrow might be tomorrow might be Araldo with the $1 million account. Everybody, Douglas is here. He's in the Forex course 202. He's a funded trader. He got 2 allocations. Douglas got 2 allocations on Darwin X0. Alright. He's doing very well. Douglas is the man who made, let me see if the money is still in the account or they made the withdrawal. Still in the account, alright, so they're going to process it today. Douglas made $3,300, alright, in 1 month and 1 week. So if you are smart, you are going to talk to the guy. Alright, account history we can check in here, all history, and save as detailed report. This is his result. Not bad, not bad. But as we talk in the Forex course 202, everybody, the money phase, be careful not to relapse. Alright? Keep doing good, be careful not to relapse. Yes, ask question, talk to each other. Captain Sir says, congratulations Douglas, and congratulations. Well, we have 5 minutes, Douglas. What can you suggest to the student traders of Forex or the Forex course 101? To learn the Fibonacci's or what? To learn risk or to learn everything? Well, I'm going to ask you what it's relevant to me as a coach and a teacher. Isn't it true, Douglas, that you learn how to make money in the Forex course 202? Isn't this true? And you cannot jump forward, you need to learn Forex course 101 first. You need to learn how this market works. Then you can jump into the Forex course 202. Learn everything, sure. Forex course 101, it's all about the market, how this market works. Then in the Forex course 202 we talk about strategies and risk management and money and what tools are institutions using to make money. And Douglas, how many years are we together? What are we? What are we? 2 years together? 3 years? Not in Forex course 202, I mean in general, from Forex course 101. I want everybody to understand something, that this is not a sprint run. Three years. So everybody, Douglas finally got the skill. He's a funded trader after 3 years. Alright? It takes time. Oh boss, what are you trying to say? It takes time to get good news, bad news, everybody. Good news, bad news. Good news. Trading, it's a learnable skill. Nobody is born as a trader. It's something that you can learn. Bad news, it takes some time. Oh, I want to get rich in 1 year. You won't. Oh, I want to get a Lambo in 6 months. You won't. It takes time. Look at Douglas, 3 years and a half. I mean, alright, if you have no job and no family and no kids, could be exactly, I mean, but if you do have a job and if you do have a family, then it takes some time, 2 years, 3 years on average. Alright? If you don't have kids, if you don't have a job, if you are retired maybe, you know, you could get the skill faster, but in any ways it takes some time. Alright everybody, let's finish for today. This is a new background. Remember, if you want to join our live New York trading sessions, you must have an account with any of my partners. You can open an account on Darwin X0, you can open an account on trading.com, or you can open an account on Search Trader. If you don't have a discount code for search, ask for it, alright? Darwin X is suitable for beginner traders, trading.com is for advanced traders, and search is also for advanced traders. If you are a beginner, don't you think going to those two. Alright? Yes, this is me telling you. If you are a beginner trader, go to Darwin X0. Those two are not for you. You're going to lose money. Oh yes, but Douglas is 3.5 years. And Douglas is in the Forex course 202. Don't compare yourself to Douglas. But as always, you know, you are not going to listen to me. Anyway, 80% of student traders don't listen to the boss, you know. What the heck he knows, you know. Alright everybody, that being said, stay strong and learn the Fibonacci's as a boss. Never forget, you're the boss.